Hey Armando, this is Ryan with TrendLizard.com. Thank you for sending me those three new tickers the other day. Sorry it took me a little bit to get this to you. Just been kind of a whirlwind week for me, but here we are, and let's start with XME, the S&P Metals and Mining ETF. So I think this is one that I looked at for you before. But let's start with the long term here. The thing that we're focused on when we look in the long term time frame is the big decline off the 2011 high. So this big decline looks like one big three-wave counter trend move. So this looks like it's a move that's going against some larger long-term trend that maybe we can't see just because it was only incepted back in 2006. Whatever the case may be, this looks like one big counter trend move, and that's supported by the super strong action that's taken place in 2016. So once again, that's just kind of the tenet of the Elliott wave theory is if it's a three-wave move, as this move is here, 1, 2, 3, it's a counter trend move. So this is bullish overall, and it makes us think that this could be the beginning of a much larger advance. So that's the long-term outlook. If we zoom in, this is the three-wave decline that I was referring to off the 2011 high. Shows the decline in a little more detail, but doesn't provide too much more information, other than the fact of saying that a move above 31 at any time would be a super bullish thing. That would be really strong confirmation that this is in fact the three-wave counter trend decline that we think it is, and this 2016 advance would then very much fit as the start of a much larger advance. So we think it is anyway, but a move above 31 on a midterm time frame would say, hey, this is the real deal. It should keep going from there. So the real action, what you really want to know, is on the short-term time frame. So let's zoom in. This is the advance off the 2016 high. This is an absolutely beautiful move. It's trendy in every aspect of the word. It's super strong. It's super direct. It's a five-wave move, which is what we're looking for to indicate that it's a trendy move. This is bullish stuff. It looks like the first leg of a much larger advance, and I think you need to be bullish here. So in regard to how this might play out from here, it actually looks like XME may be nearing a near-term high because it looks like the five-wave pattern that we look for is just about done. So all that would mean is that it would put in a high and pull back into this yellow area before it gives us the next up leg. So here's what you're looking at. A move below 2175 at any point says that this 2016 up leg is over and a larger pullback has begun. And if that happens, again, expect it to end in this yellow area somewhere and for the next up leg to begin. The pullback would likely last several weeks, probably through June, I would guess. It's always hard to say exactly, but more importantly is I would expect it to end somewhere in this yellow area and for the uptrend to resume from there. So again, a move below 2175 makes it would tell us that this up leg is over. A near-term pullback has begun. So if you were trading this guy on a near-term basis, I would want to put a stop at 2175. That would pull you out if this chart indicates that a larger pullback is going to occur. If you're trading on a more midterm basis, I would stay long here as long as XME is trading above 1650, somewhere around there. If you're not long, I would look for the pullback to occur and then look to buy the beginning of the next up leg. So I hope that's helpful, Armando. I will get on to the next ticker shortly, and we'll go from there. Thanks.